please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're still tuned into Your Stocks. Well, it's turning out to be quite stable right now for the markets, and we're just waiting by for the Yes Bank numbers and especially what they could probably report in terms of asset quality. So we're still waiting by for that to come through. But nonetheless, let's get in a couple of more queries now. We have M. Ibrahim, who writes to us from Telangana. 20 shares of Biocon is what he holds at 1150 since the past 9 months, and he's a long-term investor and wants to know whether to hold or sell that particular stock. Again, there is an adjustment which has taken place there, but nonetheless, Vijay, what would you actually recommend on Biocon? Because you know, they've been through a bit of a rough ride for a few months this year because of you know, the USFT inspection at the Bangalore plant, etc. So given all of that, how would you tell an investor to approach Biocon and maybe what to do with their holding?
Ekta, you know, we have seen that not only Biocon, but all the major pharma companies have gone through the grind in the last 2 years. And, you know, they have, of course, you know, worked on their processes, worked on their manufacturing facilities, and probably, you know, set their house in order. So my sense is that over a period of time, I think that pharma companies should now start doing better. And we will see an uptick because in the last 2 years, this is one of the sectors which has been a clear laggard. And, you know, thanks to last 2 days, we know what can happen to laggards, you know, suddenly. We've seen Sun Pharma doing well today. Biocon, my sense is that somebody holds on with a longer-term perspective should do well. For you know, he should hold on for a target of 450. So no rush. I think that, you know, pharma should start performing very soon.
Okay, Rajat, what's your take?
First of all, I personally hold Biocon stock in my portfolio, and I would go by Ekta's commentary, what she said during the last quarter, and especially when she interviewed Kiran Majumdar-Shaw. And there is a possibility that this company may continue to actually show not so spectacular results for say 3-4 quarters, given the situation that prevailed at that point of time after the US FDA I mean, whatever the US FDA reviewed. So going by that, at the moment, unless you are a long-term investor, you better not stay in Biocon. Or if you are a long-term investor and willing to bet on the company's prospect, then put a stop loss, cautionary stop loss of 325 and carry on with it, but knowing fully well that other pharma companies might actually perform much better than Biocon. So that's the kind of scenario that you can envisage for Biocon.
Okay, all right. Thanks so much for that, Rajat. Well, on that note, we'll slip into a short break. You come back, we'll continue our focus on the markets as well as answering all your queries. Stay with us.
Welcome back. Well, the number that we've been waiting for Jubilant FoodWorks is out. The same-store sales growth is coming at 5.5% and that is actually in line with what we were anticipating. So 5 to 6% was what we were working with. Let's go across to Mangalam. Mangalam, what explains the numbers then, if in case the same-store sales growth is in line?
I think there was a whisper number as well, Mangalam.
Absolutely, there was a whisper number that there could be a bit of a beat and all of that. So that's why we're seeing a bit of a smidge down. But just these numbers, 5.5%, no complaints with that. We were working with 5 to 6% growth on the same-store sales growth, and 5.5% is what the company has posted. So what explains the beat? Well, the company has said reduction in Dunkin Donuts losses continues. So that is something that we'll need to keep an eye out on. And I'm looking at more things. You know, they haven't opened more stores, so that is good. They've added one store and they've closed one store.
Management, which
absolutely, tight operational management is what they're doing. And the first half of this year itself, they've opened just about 14 stores, closed 6 stores. So there is a lot of rationalization as compared to the previous year's first half, where they added 55 stores. So less opening of stores is aiding the same store sales growth and reduction of losses in Dunkin Donuts as well. So those are things which are actually aiding the EBITDA margin. And if you take a look at the rent as well, I was taking a look at their press release and their profit statement. The rent as a percentage of sales has come down by 100 basis points, come off by around 8-9% quarter on quarter as well. So that explains the fact that they are reducing, pruning those stores which are not performing too well. added just about one store in this quarter, closed one store in this quarter, so nil. They have just 1125 stores. Rationalization of stores, reduction of losses in Dunkin Donuts, and 5.5% same-store sales growth perhaps explains the beat that we're seeing in the operational numbers.
You know, Mangalam, as you were giving us that commentary, the stock has come off the high point of the day. I think this high point of the day was 1,690 odd. These numbers, remember, they're more or less in line, but the street would have liked a number that was far better. The way the stock had shot up, it seemed that, you know, in that interim from the time we've got the financial results to the time we've got this number of around 5.5%, the street was hoping maybe this number will be far higher. But for the time, the stock is still holding with gains of around 4%, though it's come off close to around 1.5% from the high point. Yes,
I think eventually the market should take cognizance of the fact that the margins, I think, at multi-month highs or multi-quarter highs. 14. Yeah, it's been the highest in 14 quarters. So despite that same-store sales growth actually coming in at 5.5%, despite the rumors on the street, so you have to give, you know, that sort of, you have to give that benefit of the doubt to
We're getting some commentary coming in from Pratik Pota as well. Remember, it's his third quarter as the CEO. He says that Dunkin Donuts made significant progress towards the stated objective of halving the losses this year. Dunkin Donuts was a drag on the EBITDA margin by close to around 250 basis points. So that comes off by a half. That adds around 125 basis points to their margins. Additionally, our discipline of controlling costs and driving efficiencies helped improve overall operating margins. Going forward, we will continue to drive strategic pillars of superior product and innovation, enhanced value, as well as razor-sharp focus on cost management. So that's the commentary coming in from Pratik Pota.
Okay, well, so that is... yeah, Nigel, go ahead. You have
that's about Jubilant Food. I think we have gone on for a longish bit on it. The stock has corrected close to around $30 from the high point of the day. Keep that in mind as well. But let's move on. It's earnings season. We have Jitendra Financial Services Management with us. Remember, the company posted a rather strong quarter. We have Mr. Satish Menon, the Executive Director of the company, who joins in. Hi, Mr. Menon. Thanks so much for joining in, sir. You know, I'm just going through an antique note. They came out with the note just less than a month ago, and they're expecting your earnings to grow, you know, in the next 3 years by a goodish margin. Can you do that? Can you do around a 17% growth or a 35% growth, in fact, from FY17 to around FY20?
Thank you. You know, the whole objective of the company, if you remember on your channel some time back, we had said that we wanted to change the way we do business. Till a year and a half back, we were only stockbrokers.
Correct.
And we wanted to change the way we do business and concentrating on the sale of mutual funds and to create an asset-based fee model for the company. This we started somewhere in the first quarter of last financial year, and we wanted to build our mutual fund AUM through the systematic investment plan. So systematic investment plan, the whole the idea is you collect SIPs, which in turn falls in every month, every year. Then this number falls in every year. You do the work maybe in the first few months, and you continue to get the mutual fund investment inside. That is how you create
Mr.
an AUM, and on the AUM you get your fee income.
Okay, so just can you give us a sense in terms of what might have your fee income been this quarter and your growth?
So, so if I compare it to last year, the same quarter, the income from distribution was 4.88 crore, which was around 7% of the total operating income. This year, it is 10.41 crores, which is 13% of the operating income. And this is what is going to be for the next few years to come by, because, as I said, we are concentrating on building our mutual fund book rather than on the brokerage services.
So this equity income of yours, though, has been it's just up around 2% on a year-on-year basis. I understand financial products has grown significantly, but that's on a low base in any case. Equity income is majority of your revenue.
Correct. So equity income is still contributing 67% of our operating income. And as we said that we have trying to alienate ourselves from the brokerage services. The idea is to push broking services towards internet and the infrastructure to be used to sell SIPs. So we had anticipated a drop in market share which has happened. Because of the market activity, though it has increased by 4%, we have lost market share in the equity brokerage volumes. And that is we had anticipated because we shifted our focus from pure brokerage to becoming a financial product distribution powerhouse.
You know, Mr. Menon, you're talking about diversifying your business. You've been doing that as well in the last few quarters. Would you require any capital to do this sort of diversification? Do you have enough capital with you?
Oh, actually, this business, it doesn't require capital. This is today what we need is maybe a few more sales employees to do it. What we have done, you know, we had a book of 46 crores last September of SIP book. Today that book is 126 crores. So we have added 80 odd crores in the last 12 months, which has been primarily added by the same employees who were doing erstwhile brokerage.
Okay.
So this business doesn't need capital anyway.
Okay, fair enough, Mr. Menon. We're going to let you go on that note. Thanks very much for joining in and speaking to us. So that is Geojit. Shree Infra's numbers not looking too bad. So that's the consolidated revenue and not the NII. But the profit is up around 39%. We'll get more details in terms of segment asset quality and disbursements as well as the loan book in just a bit. But that's prima facie what you can see is that the profit has grown 39% for Shree Infra. Take a break, but focus on some more queries once we're back. Stay tuned.
Fasten your seatbelt. Just take a look at the Sensex. That's corrected very, very rapidly. The Nifty as well has come off the high point of the day. The key culprit should come up for you on the screen. Let's pull up Reliance Industries. That one has seen a bit of a downtick. The Nifty Bank as well has taken a leg down. So let's pull up Nifty Bank as well up for you on the screen. Just take a look at that. Reliance Industries did slide quite a bit. And even TCS, that's the other one over there. That's quite a large weight as well. That's moved into the red. So the Nifty Bank now is down close to around 50 points. The Nifty is on the verge of moving into the red. And in fact, the mid-cap index as well has come off the high point of the day. We'll wrap up on this show, but you stay tuned. Exciting final 60 minutes coming up on expiry day.